Gang, hi, how are you guys doing? So, this video is an extension of the zone trading strategy that I talked to you guys about. Now, I mentioned to you earlier that zone trading is all about identifying significant levels where price is breaking from, right? I just want to use this and show you some screenshots. So, identifying areas where price is bouncing from, waiting for price to break out, waiting for your first bounce for confirmation, and then you're entering on the second bounce. Now, it's beyond just the bounce and all the things you're hearing. Let me break down the psychology for you so that you can truly understand what I mean, right? So you can truly understand what I mean. So right off the bat, I explained to you guys that when price is moving in a particular direction, everything that is pushing price here is volume and liquidity. At some point, price might decide to react in a certain way around a certain level. That reaction that occurs around that level is what you are paying attention to. So the first thing I explained to you was, what is a zone? Well, when you look at this crosshair, you see that it goes to 179.842. And if you drag this and for the first part, you drag this all the way up to here. So the region from 179.798 to 180.112 is a level that price is extremely interested in. Why? Because something happened here two times, and then now you want to pay close attention. So the only reason why you will not enter a trade is if after price interacts with this, breaks out, it fails to give you your double confirmation, then you have no business entering the trade. Just as in all these screenshots, this is an inverse. This is the bearish side. So you have price, progressing from the upside heading down. At some point, this forms, right? Price is going upwards. Now, already from the bearish move, we are anticipating what? A sell. Now, at some point, price bounces, just, gets to this level, pushes away, comes to this level again, pushes away. Immediately, I see this kind of double bottom here. I plotted my square around it, and all I had to do was to wait for price to break through. Now, I told you there are two types of breaks you experience. You have full volume breaks, which must involve an imbalance, or you have a very subtle break. Those ones will be a series of small candles with a lot of rejections, but it will rally to some point. The breaking style doesn't really matter. The main thing is, once you spot a break, you go into analysis mode. Basically, this first spot that you're doing is just for structure. You're not really doing anything. When you come into your naked chart, you're just going to look for levels where there is similarity in price. That is, areas where price seems to be reacting from. You wait for price to break through that level, then you watch how that level performs again. In this case, we broke through, we came here. Remember what I told you? The lowest or highest point created after the breakout is what you have to use as your TP. So gone are the days where your TP is careless. Your TP cannot be targeting other previous zones. No. The highest or lowest point after the breakout is where your take profit is. So if your take profit does not move long enough to naturally give you 1:2 or 1:3, then the setup to you should be invalid. I digress. Now, price gets to this point, we plot it out as our target point. We get our first bounce and reaction, and we get a push away. The moment price starts to pull back into this level here, then we have this pull. All I have to do now is just to put a sell stop at this point. Whatever happens inside here is none of your business. And you see how price ultimately pulled, smashed through our take profit, easy as ABC. And this move is probably a 1 to 4, 1 to 5. So these are more examples. price was pushing up prior to all of this happening. You have price reacting here, and this was a slight push before you had this break. This is the highest point after the breakout. There is this to count as my first bounce, but in this scenario, just the first bounce, we took the trade. But this trade was taken based on the experience I have already using this strategy. And this is, you know, when there was a time in the during the course of the programs I had where we cut gold back to back. This was 1:4 or 1 ratio. I think this was more than 1:7, if I'm not wrong. And it ultimately rallied all the way to here to probably like 1:20 or something. But after we closed out, we just had to wait for another opportunity. Now watch. This was a big rejection. This is significant, but the wick is not completely rejecting. We now have this also, followed by a breakout, highest point after the breakout, take profit. We have a pullback. Now, this is also another entry model, but I would not really talk about this now because it is not optimal. In every strategy, there is an optimal setup, and then there is a setup that you can take in case you want to like take the risk, right? So in this case, this was one of them. We gave the call as well. This one was also profitable. You can see after this reaction here, I plotted out the square and I was waiting for price to come and give me double confirmation here, but we didn't get the double confirmation and price just, rallied through. Let me show you some other examples again. Okay, this one is one of those the ones that didn't really play out the way we wanted. This is USD CHF. You can see what was happening around here. Obviously, just by looking at price structure, you can clearly see that something is happening around here. Now, I know a lot of liquidity traders will say, oh, liquidity grab, this. I understand liquidity is a very strong strategy and it's really good, but just by paying attention to price action, sometimes just by paying attention to price action, you can really have an edge already. You had price reacting on these levels several times. And what do you have? You have your long break with an imbalance. And price pulled all the way back down to this level and we got our first touch, second touch. We actually took the setup from here. Eventually, price came and pulled back and then we ended up jumping in, for the second time. That is after price came back to our entry point. We ended up entering another position and that one went through. I want to see a lot more examples. Yeah, so these are all examples of this. Is the same USD CHF. This was when we had our first entry. This is what our first entry looked like before it transitioned to this on the 4-hour time frame. So we took the second entry on the 4-hour time frame. So what we had as our first entry here, which is first bounce, second bounce, appeared as a first bounce on the 4-hour time frame, and this was the second bounce on the 4-hour time frame, and we ended up catching that one. So then you have this, right? You have price pushing in a, price is trending up, right? Then at some point, price suddenly turns and falls. Then price goes up again and gets to the same place it turned from, and then it fails to break. And afterwards, it pulls back a bit. Then we follow through with a very, very heavy imbalance breakout. The highest point after the breakout is your target point, and every other thing happening is just you anticipating price to come back to this level, right? So that you can anticipate the first bounce. And remember what I told you, the psychology behind the first bounce not sweeping this highest point is when there is an inflow of buyers here, there is also going to be indecision because this is around the zone that something happened before. Now, buyers and sellers are thinking, should we rush in here? Do we know whether there is more sellers? You can't really know because everybody is doing their own thing. But you now, understanding this price action, you already know that, number one, I'm only waiting to see my first confirmation. The logic behind it is, if all the people who want to buy jump in here, if enough buyers jump in here, price should sweep this level, which means all the buyers would have jumped in. This is where they'll be taking profits. So when price does pull back, there is a slimmer chance that price is going to respect here again, unless there is a very very dynamic or very strong bullish trend or strong bullish forecast for that asset, for the pair. In this case, you have our first bounce and you have our confirmation that the buyers are interested. Then you have this as the second bounce. Now, naturally, without the turtle soup, nothing, price pulled below. All I had to do was just to put my buy stop entry at the top, and boom, we got our 1:3 done. This is Eurocard. This is Eurocard. So this is yeah, so it's all Eurocard here, and which is this? Is this the trade? Okay, no, this is the USD CHF trade. So let's look at more examples. This one is Euro JPY. As you can see, price was pushing up, got to this point, rejected, got to this point, rejected. Then you have the second type of breakout I told you, right? So this breakout is a rally. Sorry about that. This breakout, rallied all the way up, and you know what I mentioned? This is the highest point. Now, after this highest point, you see that price hadn't come down here, and at the same time, price hadn't really taken out the high. So this trade was extremely valid to us because we considered this as an accumulation of liquidity. Now, I know a lot of people will say, oh, this, and in fact, this was also an LBS setup, because if you see, we marked up our inducement, and this is pretty much the last bearish candle before the rally. So this could categorize as your order block, but we use zone trading to enter this. As soon as we have all this, price hadn't swept our highest point, market opened on our zone, pushed up a bit and came back for a retest, and we just put our entry at the top for a buy stop. And as soon as price came back up and started propelling, we got our move, and boom, this was gold. The build up to this gold trade that we caught, so this is gold. This is the build up to the gold we caught. This one, we also caught this bearish move, right? So this was price touching here with a breakout. Now there is a variation of the zone trading entries, right? There's a variation of zone trading entries that you might want to put into consideration, right? There's a variation of zone trading that you might want to put into consideration. So there is also a chance that, hold on. So there's also a chance that price will be pushing in a direction, reject from there, break out, come back to reject, and here you go, right? So this is also something that can happen. The thought process is this one, you didn't see two rejections prior to your entry, right? Rather, you got one rejection, one breakout, another rejection for confirmation. The moment there is momentum, the reason why I say for zone trading, the only thing you're paying attention to is what happens after the breakout. Even if there has been 35 rejections, it doesn't matter until price breaks from there, resetting the zone or gathering liquidity that has been set around that area. Distribution. Now, price is going to pull back for an opportunity, because all the people who let me not say contributed, so it doesn't seem like we're but all the people who were involved in the market pushing all the way up will sell off, and it is the sell off that will bring price back to the zone. Now, whatever happens on the zone will tell you if you're going to continue in the trend, or if you're going to invalidate the trend and change structure for a new trend. Now, we have this break. You have price react from here. First, push up. The push is not higher than here. A retrace. You put your entry as well. This variation also works really well. These ones are some of these trades that we're taking based on experience that I have. You have your rejection, you have your breakout, you have the highest point, you have your first bounce. This one pushes up, you have your second bounce, and we have a sweep of the highest point. Then you have price pulling back all the way back, pulling back down. But this LBS entry is, you have inducement, you have last bearish candle, order block, and you have your move. So all of this is basically all of this is basically the so this is the build up of the trade, right? This is the first bounce where we saw the first bounce. Then we just had to wait for price to create our second bounce. So at this point, where was it? So this was the point where price made the second bounce and I gave the call. You can see where we put our buy stop entry, and this is what we have. Price pulled all the way up, pulled back a little, and ultimately completed our take profit. So zone trading is extremely efficient. I would advise you to go ahead and backtest, practice risk allocation. Make sure that whatever setup you're taking is worth your risk. Don't just jump into setups carelessly. Make sure it's worth your risk. Now, of course, there's times when you would have invalidations where you would have this and this, right? So this one was not precisely accurate, but if you measure it up, if you measure out the base of this candle to the peak here, it will tally with this. Now you have a breakout, you have your first bounce, and upon the second bounce, we put our buy stop. We never got triggered. The trade just invalidated and went to the downside, and that was it. So the way zone trading works, the outcomes of your zone trading can be very predictable. If your trade is going to hit take profits, you're probably going to make a lot more than 3 to 5%. The more after the taking profits, I'll say you should win more than 70% of the time with this approach. The other time when you're not winning, it's mostly going to be price invalidating your entry. And because you're using a pending order like a buy stop or sell stop, you're not really going to get tapped in. However, there are scenarios where you will get tapped in and price will rally down to your SL, and that is done. So just figure out the risk management you want to use or risk allocation you want to use, and yeah, pretty much go with the flow of that. So I have a okay, that's for LBS. I have a Notion link that's for LBS, but um yeah, that is pretty much the logic behind zone trading and its efficiency. Now, of course, there are scenarios where you would have price, reacting from a particular zone, and all of a sudden it seems like price just changes direction and pulls, changes direction and pulls back into your entry level. So what will classify as a violation of your trade is if you have, let's say you have something like this, right? Reject, reject, break. Now, if you have something that looks like this, your trade is invalidated. There's a difference between an invalidated setup and a turtle soup. Turtle soup is a fake out. I adopted the term from when I was studying liquidity a couple of times, and I got to understand that this is a fake out. You usually know it's a fake out mostly because of the quick reversal that occurs. So price will break a level and run back to pretty much where it broke from, so rapid. That is what you call a fake out. Sometimes a fake out can be a rejection candle that will just break through your zone, as at the time when the candle is full to you, the zone is broken. However, you will see price reject and close back, above where your entry point is, and yeah. So hopefully this gives you a lot more clarity as to what zone trading is about, and I hope this helps you understand zone trading a lot more. Do you guys want me to make videos on LBS? If you want me to make videos on LBS, say it in the comments, make video on LBS, and I'll give you guys my LBS strategy. Make sure you follow me on Twitter. I've been doing a lot of flips lately, but majority of my trades have not been fully technical based. I have a lot of order flow infused as well. You can see where we have our typical entries, right? Typical entry, and you have this. This is also zone trading, right? You have this break. This is the variation of zone trading I was talking to you guys about just now. This is the continuation of Euro AUD single bounce, but with the presence of volume, it's a lot easier because the volume will just help you understand what exactly is going on. So I had to learn a few things, and yeah, pretty much. So that's it for now, guys. I'll see you in the next one.